Hey there, and welcome to this explainer. I'm really thrilled to have you here today. We're going to be looking right over the shoulder of an expert trader to master something that honestly gets overlooked way too often, yet it is the absolute foundation of your success. We're talking about the exact mechanics of your trading apps. My goal here is for you to feel completely confident and completely safe every single time you open your broker platform. So let's dive right into it. Look, you could have the absolute best stock analysis in the world. I mean, you've read the charts perfectly, you've checked the fundamentals, and you are absolutely certain a stock is going up. But if you make a simple mechanical mistake on your broker app, like just choosing the wrong order type, well, that brilliant idea can literally lead to immediate, completely unnecessary losses. Execution is just as important as the idea itself. To fix that, we need a solid roadmap. आज हम मार्केट के इन 4 essential pillars को decode करेंगे. CNC versus MIS, market versus limit, the stop loss, and finally, GTT orders. Starting off with pillar number 1, the foundation, delivery versus intraday. You know, before you even glance at the price of a stock, you have to ask yourself, what is the core intent of this trade? Now, on Indian broker platforms, you're generally going to see 2 main options. First is CNC, which stands for cash and carry. Think of this literally like buying a house to live in. You pay the full amount upfront, you take actual delivery in your demat accounts, and you own it to hold for as long as you want. Then there's MIS, or Margin Intraday Square Off. This is much more like renting an event hall for a single day. You're using it briefly, but you absolutely must pack up and leave by the end of the day. Since you are essentially only renting the stock with MIS, the platform treats it as a purely temporary position. It actually uses broker margin to let you trade with more capital than you currently have in your account. But here is the absolutely critical warning. ये order automatic square off हो जाएगा. If you don't manually close the trade yourself, the broker system is going to automatically close it before the market shuts for the day, and it does not care whether you are in profit or in a loss. It completely changes your risk profile. All right, moving to our second pillar, execution tactics, specifically market versus limit orders. So, you know what you want to buy, right? And you know how long you intend to hold it. But how exactly do you want that trade to execute? This brings us to the exact dilemma you face जब आप buy button click करते हैं. Do you need speed or do you need price control? Getting this wrong is exactly where a ton of slippage happens for everyday traders. Let's break it down. A market order is essentially like handing a blank check to a shopkeeper and just saying, hey, buy it right now. It guarantees instant execution speed at whatever the best available price is at that microsecond. But, and this is a big but, the final fill price might actually be different from what you saw on your screen just a moment ago. A limit order, on the other hand, is like haggling. You're setting a strict ceiling price. You're telling the broker, listen, I will not pay a single rupee more than this. So your price is strictly locked and protected. The risk, though? Well, if the market never drops down to your haggled price, your order won't fill at all, and you might just miss the trade entirely. Now for pillar number 3, which is absolutely vital, defensive maneuvers, the stop loss.
Okay, so you are in the trade, but what happens if the market suddenly turns against you? Apne capital ko protect karna सीखो. To do that effectively, we have to cut through the platform jargon that honestly confuses so many people. A stop loss actually has 2 totally separate components. First up is the trigger price. Think of this as the alarm sensor. It simply wakes up your broker system. The second component is the limit price. This is the exact exit door price you are actually willing to accept to get out of the burning building.
Let's actually walk through the exact mechanical sequence of this. Step 1, the market price starts falling rapidly towards your danger zone. Step 2, boom, it hits your trigger price. The alarm goes off. At this exact microsecond, your protective order is finally activated. Step 3, only now is your actual order sent to the exchange to exit the trade. Remember this, the alarm always happens first and the actual exit action happens second. Now, because of this 2-step sequence, you actually have 2 choices for your exit door. A stop-loss market, or an SLM setup, means that once the alarm goes off, you take the absolute fastest escape possible. You will definitely get out, for sure, but the exact exit price might slip much lower during a really fast crash. Alternatively, a stop-loss limit, or SLL setup, means once that alarm triggers, you are demanding a specific, safer exit price. But the massive danger here is that in a truly violent crash, the price might gap right past your limit. That means the door might not open at all, completely trapping you inside a falling market. You constantly have to weigh a fast escape against price control.
And that brings us to our final pillar, advanced automation,
or GTT orders. This one is basically for when you want to trade smartly without having to constantly stare at a glowing screen all day. GTT stands for Good Till Triggered. It is a long validity order. Think of it kind of like setting a smart coffee machine timer. You obviously don't stand next to the coffee machine all night just waiting for the morning, right? You predefine your rules, you set the timer, and you walk away. The machine acts completely on its own when that condition is met. Well, GTT does the exact same thing for passive investing and swing trading.
Let's look at the timeline. On day 1, you set your target rule. Let's say you want to buy a specific stock, but only if it drops another 10%. For weeks, or maybe even months, that order just sits patiently on your broker platform. You are passively waiting, just living your life. For up to 365 days on many platforms, it stays completely valid. Finally, maybe months later, the trigger condition is met and the broker automatically places your limit order without a single bit of human intervention. You literally set it once, wait, and it triggers later.
As we pull all these pieces together today, the solid foundation of CNC and MIS, the precise execution of market and limit, the vital defense of the stop-loss, and the incredible automation of GTT, I really want you to remember this absolutely crucial takeaway. Flawless analysis means nothing without flawless execution. In trading, the wrong order type can change your results entirely, even when your stock idea is perfectly right.
So, you now have the knowledge to navigate your broker platform like a true professional. You understand intent, execution, defense, and automation. तो next time जब आप trade place करेंगे, क्या आप सही order type choose कर रहे हैं? Take a moment to really reflect on your own trading habits. Stay safe out there in the markets, and I really look forward to exploring more market mechanics with you very soon.